All right, well, let's get it going. All right, so welcome to the live stream, guys. Before we get started here, I just want to so I'm B, and I just wanted to touch on a few things. And those of you that have been in the live streams before, this may sound repetitive, but I just want to start off before we dive into everything here. Is your trading station, right? Where you're doing your trading at, whether you're an institutional trader or an individual trader, you want a peaceful place. Your trading desk, right? You want it to be quiet. You don't want kids bouncing off the walls, and also before you come into the market, you want to have your emotional status intact. You don't want to be you want to be clear minded. Something that I like to do in the morning before I come into the market is just take like 15 minutes and just do some slow deep breathing, clear my mind. You don't want to be trading, if you're arguing with the spouse, or maybe you lost a loved one or something like that, and it's weighing on your mind. That'll distract you. So you want to be level headed when you come into the market, so where you can give it 100% of your dedication and focus, clear minded. So I've said that before, but that helps. Some of you may not be trading at home. You may be at your job site, your 9 to 5 or whatever, and just taking a trade, maybe on your lunch break or something, and just trying to make it work. But it helps if you're in a nice quiet place and you could just dedicate your focus to it. It helps. So levels, guys. So we're going to touch on this. Is simple, okay? I'm going to try to explain it in the most simple terms that I can. And if you don't know how to draw these lines for support and resistance, we get a lot in the chat. Hey, where's the resistance level at? Where's the support on this stock? So at Options Arena, we do most of the heavy lifting for you, right? But it doesn't hurt to learn this on your own. And that'll help reduce too, because we may be juggling a dozen different positions at any one time, and we might not have time to respond to, hey, where's the resistance on Amazon text, in the chat or whatever. So doing this little session here, hopefully will help to identify support and resistance. Okay, now there's a couple different support and resistance factors here. Okay, so you have price, and then you also have moving averages that act as support and resistance, right? So let's start off with SPY. Anna, everybody pull up a chart of a daily chart of SPY. Since we trade this a lot, SPY Anna, she's my queen, and those of you that have been following me long enough know she's my salvation. We trade her a lot. You know, there was a chapter in my career where that's all I did was trade SPY. She was the only thing in my watch list, and just day after day for a long time, that's all I did. So I got very acquainted with SPY and how she moves. So yeah, she's my queen. I trade this more than anything. She's beautiful. I dubbed her Spy Anna. She's the most beautiful thing. And so it could be, overwhelmingly enchanting when she runs. So some good trades. We don't lose on Spy very often. I think this year only one loss on Spy so far. So it's a dopamine rush. She'll make you feel like you're king of the world. When she runs your way. So it's a beautiful thing. So we'll start off with Spy. This is a daily chart. Each candle here representing one day of trading. So 6.5 hours plus the 15 minutes after. That's what each candle here is. Okay. So the first thing we want to do is, and this goes for any stock, any security that you're charting out. So this blank screen right here, no lines, no annotations, no nothing, just starting fresh. The first thing we want to do is map out the high. Now, most of the time, this is only going to be a single candle high. So here it is, 695.31. So we're going to map that out.
And to clarify, we're talking at the high of the highest of the wick, especially in this situation. We're talking at the highest of the wick.
Yes. And I'm going to get into the bodies here in a little bit. But
Okay.
usually, okay, most of the time, guys, when it's a high and when it's a low, go ahead and take the wick part, okay? And it doesn't hurt to take the body of the candle as well. So when we get into drawing more lines after we do the highs and the lows, then we're going to start pinning. You're going to be using the body of the candle, which I'll demonstrate here, right? Okay, so we got our high mapped out at 695.31. Now, within your broker, there should be a way for you to draw that line on there where it'll stay there. It'll be there for you tomorrow and the next day, and until you take it off of the chart, you'll always have it, or until we make another new high, right? Okay, so we have our high drawn. So we're just going to scroll out here a little bit in time, and we're going to try to identify a bottom, which, I mean, if you scroll way out, the low is way down here, which let's put one there, right? So we're going to stick that low. We're going to put a line there. So around 481.87, 481.85, somewhere down there. So now we've identified this range, right? From all the way down 481s to 695s. Huge range, right? All right. Let's
I have a
scroll.
question.
I'm sorry, what?
Sorry. What is the duration that you have taken for the high and the low?
What is the what now?
The duration.
Duration of time. The duration of time is a daily chart. That's what we're doing now, and then we're going to zoom in and get down into an hourly chart after we're done mapping out our daily levels. Then we're gonna zoom down to an hour
Okay.
time frame. Okay, so here we have this candle right here, this big red candle in the middle, this guy, right? So that hit a low, right? That made a low. Buyers stepped in and pushed the price back up higher, right? So we know that buyers are hanging out there, right? That's where they stepped in before, right? History tends to repeat itself, or at least it rhymes, right? So let's put one there around 671.30. All right, now we have a range from 671.30 up to the recent highs of 695.31. So we've narrowed down the trading range. Okay. Now, granted, yeah, that is whatever, a $24 move in between these, right? So we want to zoom it in a little bit closer. Let's find the next one, right? And usually, guys, what you're looking for here, besides, I'm not talking about the highs and lows, okay? Those may only be one single candle, right? But now when we're getting into the grid of it, the middle of it, right? We're looking for a minimum of 3 candle touches. 3 candle touches is what we're looking for this next level. Okay, which, let's see. So here's these 2 candles here, right? Here's another low. It came down, right? And what happened? It bounced up from there. So we know buyers are also hanging out there at 681.45. They're also down here at 671. So price here, right, from the 671, it came down, it bounced up, right? It retreated a little, but it didn't come back all the way down to 671. Buyers stepped in right here and pushed the price back up. So let's see. We have a candle touch here on this red candle. That's one. This candle, two. Come over here. Here's the top of this candle, 3, 4, 5, 6, 7, 8. Okay, 8 touches. That's great. So let's put a line there, right? A lot of price action going on around that level. So we want to have that level on our chart. So we're prepared to take action on that level next time the price comes down to it. We'll know, right? So we'll put it there. The body of that big red candle, 681.84. Now we have even a tighter trading range, right? We have the 681.84 and we got the high of 695.31. So we just identified a nice little trading range. Okay, now we can even go tighter with it, right? So we have this support here, 671.30. We have the next support up here, 681.85. We have our high. So scrolling out in time, let's say we start to see some massive selling pressure coming into the market here, and it dips below our 681.4 and selling pressure continues. Let's say it comes down to our next support level and breaks below that. So where is the next support level where buyers are stepping in at, right? So we have this low here, couple candle touches. We have one there. Let me zoom up here. Okay, so we have a candle touch there, this big red one. We scroll out, there's some more over here, 3, 4 touches. Okay, so we have a minimum of 3. So that's a viable support zone if we break below our 671 level, right? So I'm just going to stick that. I'll use the body of this candle here, the big red candle, 652s. Okay, so now we got plenty of our downside support levels to play off of. All right, any questions so far? Make sure your guys' mics are turned on if you want to shout out a question.
So I am a little confused, just a little bit, just so I mean maybe it's just because I'm trying to look at yours and trying to look at mine at the same time, trying to do it at the same time. So obviously when we're making the lines, you want to zoom out and see how many times they touch. We're just talking about like touches through the whole body. Like if they pass that point, we're gonna count that as a mark. Correct? Or not really a mark, but
Okay,
like so when we're making a line.
give me an example.
So when we were talking about it touched 8 times. So we're just talking about as
Right.
it goes up and down, but it has to touch that line. We'll be considering that as a touch.
Yeah. So what'll happen likely? Let's say some selling pressure comes into the market tomorrow, right?
Mm-hmm.
And the price comes down here to 681. That these two candle touches that we have and the other candle touches over there. So that line, that 681.84, what do you think's going to happen when she comes down to that level?
It's either going to bounce back up or it's going to continue going down with the lines you already have for the
Right. You're going to
671.
see, you're right. You're likely going to see some sort of reaction there at 681.84-ish, right? You may see a little bounce off of that support, right? And then it may continue back up to the highs, or that support's just going to break, and so okay. So let's say it comes down to that 681.84. You're going to want, most likely, okay, you're going to want to buy a call at that level, because chances are you're going to get a reaction. You're going to get at least a little bounce off of that.
Yeah.
Okay, unless it's just big red candle and just blows right through it, you know. But here's the thing. So remember I said there's two different components to the support and resistance,
Mm-hmm.
and the other one is moving averages, right? So we have our line drawn 680, 81, 84, right? But this green line that I got coming through here, this is our 50-day simple moving average, which lies right beneath that support level. So that 698 level, let's call it, where that green line is, that 50-day moving average,
Mm-hmm.
that also will act as support, right? So we have like kind of a double support with
A little buffer.
yeah, an extra little like kicker there.
Would you say basically like with the support and resistance lines, they're like our boiler bands essentially?
Yeah, yeah, in a way. You
Okay.
know, that the support and resistance, just basically all it is where buyers and sellers previously have executed.
Yeah. Okay.
That's all it is, right? So okay, so let's say, for example, the price comes down, it sells off, and it comes down to this support level, and it breaks that 681.84. So our next level right there, that moving average is 689.85, right? So another couple bucks below that. Chances are what you're going to see the same thing that's going to happen here, right? It's going to come down to this moving average, and it's going to bounce up a little bit. So either a buy at the 681.84 level, or a buy if that breaks, then a buy at the 50-day simple moving average. And then we know if it breaks below that, we're going to 671s. Okay, let's zoom in. Now pull up an hourly chart. And your line should still be there. Okay, so we got our high mapped out right now. Now we can zoom in and really get into the grit and into the meat of this. And this is great for your intraday trades, right? Let's say you want to come in, you make a trade, you're on your lunch break or whatever, you got an hour to try to make some money. And hey, guess what? You know, a SPY is on this support level here. I'm going to buy it, and I'm going to exit this trade within whatever, 20 minutes, half hour, an hour, or whatever, right? So we have our high mapped out, right? But let's also, now those are the top of the wicks that we mapped out. So now we want to take the bodies of those candles, because those also will be support. And we have 3 candle touches there. If you look, we got the red candle, we got this one next to it, and we got this one, the wick touches it over there. So that's 3 candles. So on the upside now, right, our first level of resistance here on this chart is going to be 694.89, which is only 45 cents away. Okay. So let's say, for example, we bought a call right here at this level, 694 or 694.40s, and we're looking to exit this trade or at least trim some profit, right? We're looking for SPY to move that 40 cents up to this level. So that'll give you a few bucks in the options. Even though it's only 40-cent move on the security, the option is going to move. You know, it may give you whatever, a 20% gain or 10% gain or whatever from here, our entry, to this resistance level, right? So it comes up, boom, we're going to take some gain right there. You'll see a trim text, right? So what I like to do, some people will dump all their contracts at once, right? What I like to do is sell them into the strength of the move, right? So let's say we buy calls, right? and the price is moving up. As it's moving up, I'm taking profits along the way. I'm trimming the position, right? Now, with the daily doubles, like anytime you double your money and whatever it is, not just trading, anytime you double your money, it's a good day. So my suggestion for those daily doubles, if you hit a double in the market, let's say you have 100 contracts on it, right? You sold a few on the way up and then boom, we hit this double. Automatically take half of your position off the table at the double. So let's say you have 100 contracts, you sell 20 of them, right? Now you have 80, and then boom, we hit a double. Reduce that position down to 40 contracts, and then we'll see what happens. We'll scale out the rest. Because what can happen is, especially trading same day options, is that you could lose that profit. Okay, you could have, let's say, a 50% gain or 100% gain, and by the end of the day, that's wiped out. It's gone, right? And you didn't take the profit. So I just want to express the importance of taking gains. When the market gives you the profit, take it. Okay, I mean 100% is huge, guys. That's a big win on your money. Okay, 20% is a great win. You know, that's fantastic. So trim the position at a double, no matter what. Take half off, and then let's see if we run higher. That way, if the trade does go against you, you can go back and say, hey, all right, hey, at least I took a double on half of my position. I made money there, and then I scaled out. I got out of the rest before that profit dissipated, right? So take the gains. Okay, so let's map out some more levels here on this hourly chart, okay? So one that stands out to me right away is the top of this green candle here, right? It looks like we got some action going on there. We got the top of this candle is one touch, 2, 3, 4, 5, 6, right? So we got some support there, don't we? So we want to put that in there. We want to have that on our chart, future reference. And too, guys, the thing about these levels here, right? It's more of a zone, okay? Not always is it going to come down and hit it to the penny. Okay, it's not going to be exact, is what I'm saying. It's a zone, right? A little bit of cushion. What can happen? Let's say, for example, the price is coming down, right? We're coming down. Hey, it hit our support here, right? To the penny, it's on it, right? 693.9, and then what happens? It comes down to 693.82. The momentum will overshoot that support a little bit before it bounces back up. Okay, so not always is it going to be exact. Okay, sometimes it is, but most of the time you'll see a little overshoot there, and that goes for the resistance side as well, right? So let's say the price is moving up. We're trucking up here, right? Okay, we broke our first resistance here, right? It's going higher. What'll happen here? Okay, let me ask you guys. What do you think's going to happen when we get back up here to the all-time high? Anybody?
Kind of like you said, it can either continue going up or it will go up a little bit, then break down. I've definitely seen that a lot of times that, you know, maybe it just could be either big whales or institutions that they just want to get that one last little bump just before selling off, or continuously just pushing up, because we've seen that this week that, you know, I really thought that we were going to hit the all-time highs and it's kind of settled down a little bit, but no, we shot to the moon Friday.
Yeah, I kept seeing your post in there. It looks like we're going to all-time highs. I think you did a few of those, you know?
Yeah.
So, yeah, and we hit them, you know. Santa was late.
Mhm.
So price is moving up here, right? Likely what's going to happen when we get to the all-time high is a rejection, right? Because we know stellar hanging out up here, right? They sold it off twice up here. They're likely they're going to sell it off again when it gets up there, right?
Hmm.
Now, this is where the shape of the candles are important, right? What is that candle looking like that's coming back up here to that high? Is it a big, bold green candle like this one over here? You know, then likely that's going to indicate to us that, okay, it's going to blow through this resistance level. That's a big, strong candle, momentum is strong, volumes in there, we're going higher, right? Now, what it may be one of those. Let's say it comes up here and forms one of those inverted candle hammers, or a fucking hanging man or shooting star or something, right? Like, okay, it's like that. That's going to indicate we're going down. So that's for a whole nother lesson, is the shape of these candles and what they mean, and all that. But for now, I'll just stick to the levels here. Okay, so.
Can I ask
Okay,
something real quick?
sure, sure.
So, obviously, we'll stick it to the another time. But just in your opinion, do you find it a little bit easier when trading just like shapes and patterns? Easier when they're farther out? So, like, let's say we go from the days, or we'll go to the hours, or do you find it a little bit easier when you're going down to the same day trades? That when it goes down to the 15 minutes, a little bit easier to identify patterns via 15 minutes compared to a day or hours, in your opinion?
It okay. It depends, Kay, on what your time frame is for that trade, right? So
Hmm.
if you're trading a same day expiration, right, you don't want to be fooling around really with the daily charts, okay? But well, I mean, your levels are going to be there for the daily chart too, and they may come into play, but you want to zoom in on your hourly, or even like you said, 15 minute. I really don't mess with the 15 minute. Maybe at the end of the day, the very last 15 minutes of the session, I may glance at it real quick, right? But to get the bigger picture, of course, a daily time frame or even a weekly time frame. A weekly time frames are good, like now on a Sunday, right? So we're going into a new week of time. So let's see what that weekly candle look like. Or at the end of a day, right? You want to look at a daily candle to try to get a gist of what it's going to be looking like going into tomorrow. That candle will give us a hint. It's not going to be 100%, of course, but it'll give us
Yeah.
a little hint, of what's going on. So here, for example, this long stem, this long stick of a candle, right? So that's a hammer stick candle, right? And a hammer stick indicates upside, right? And that's exactly what happened. The candle formed right there at the top at 694 and push price up, 50 cents. Okay, that may not be done playing out yet. That could even continue. So that's something here. Okay, remember earlier last week, guys, we had what I call these rogue candles. Right here it is. This red candle with this long stick. Right. Remember, I did a post about the price action on this. Right. These rogue candles. I said these things always fill. It may not happen right away, but they always fill. Let me see. I don't know if we could bring that post up. If you guys remember that or not? Where was it? All right, Phil. Let's see if we can get it here. No. Shit. How long ago was that? That was on Tuesday or Wednesday.
Yeah, it was something like that. I remember.
Yeah. So anyway, I said, hey, the price is going to dip. It may take a few weeks, but it happened pretty quick, actually. Um, so that was on Tuesday, I believe. Yep, Tuesday evening. We saw this likely was a dark pool trade or whatever that came in down to that level. We filled it in a couple days. So here now, look what we see. We have another one, right? Right here comes down to this level here, 689.54. We're going to want to put a line there. Okay, even though it's just one candle, it's not three touches, we still want to map that out. Because likely what's going to happen, guys, what do those candles mean, right? Again, the price likely is going to retreat down to that level. We just don't know when. Okay, now usually these rogue candles fill within 2 weeks, most of the time. It may take a little longer than that. So what can happen is the price may bounce around up here. It may come up, tap this all-time high or whatever, but eventually expect price to fill back down here to that candle low. So that's something to watch going forward here the next few weeks is 689.61. So basically what you can do just based off of that information alone is 2 weeks out, you could probably take a SPY put, say a 690 put or 691 put, something like that, and just sit it out and wait. The price action here will, like I said, it'll fuck around. It may come up to this all-time high and then boom, start to decline, right? But we have these moving averages too to get through, to get to that level. So expect some, when it comes down to this 50-day moving average here around 6, we'll probably get a little bounce there off of that 50-day moving average before we do finally fill. And then if it breaks below that, we always have the 200-day below there and some other candles here, right? So something to keep in mind going forward here is that price action down to 689.61. They're likely start selling off the market and will retreat back to that price. So, last week we got it. We identified that on that big red candle, right? And what happened with the SPX and the QQQs? They gave massive gains, right? We just kept riding it and picking up more contracts, playing other strikes on it. And shit, man, there was like over 2,000% in profits just between the SPX and the QQQs. We didn't really trade all that much that day. We just took the puts, and added more different strikes as price action continued to decline. And man, that was fucking stellar, huge profits. So here it is again, the same playbook, right? So let's keep an eye on that level going forward here. And when the time's right, when we get open here, we'll get a little indication on Sunday night futures. If we push back up, what's going on? If we come back up here, most likely it'll be puts. Okay. So now we have this range. This is on an hourly chart, 693.9 to 694.89, right? So that's a $1 range, which if you play it right, will give you a very nice return in an option, either a call or a put, right? So for example, let's say we want to short the market, right? We're playing puts. So if we say, hey, let's take this down to our support level, where that support level is, 693.94, right? So let's find some more supports. If we're going to be coming down likely to this rogue candle low, we want to identify the supports along the way to scale out our big put trade. So we have the top these two candles right in here. Scroll back in time here. Okay, yeah. So there's this big cluster of candles right here, right? I don't know how many candles there are. What, eight, nine hourly candles here, which coincides also with those two candles that we put our line on there. So 692 and a quarter, basically, right? We got plenty of touches, right? We got whatever, 1, 2, 3, 4, 5. We got enough. The more touches, the better. So we're going to put a line there. $6.92 and a quarter. All right. So we've identified another support level, which also happens to coincide with this orange line that's running through my chart, which is the 20-day simple moving average. So that's like a double support zone right there. Now, those moving averages will change, once the market opens and Spiana starts moving around, those will change a little bit. But right now, it's sitting at a double support zone right there, 692.25. So now we have this little wick, right? Or this little stick coming off of that green candle right there, 693.36. Price came down, bounced off it, came back up, grabbed that support level there. So even though this is two candle touches, probably some more back in time. So we'll just stick a little one right there. Right, we'll take the top of that one. Let's use the bottom right there. 693.37 ish. So now on the downside, let's say we come up here, we hit the all-time high, and we load up the boat with puts. So we have some levels below here where we're going to be scaling out our trade, where we're going to be taking profits along the way, right? Boom, 20%, boom, 50%, 75. You know what I'm saying? Till we get that daily double and unload. Where's another level at? So we have the bodies of these little candles here, these two candles right in there. Traders took the price back up there a few times. So let's stick another one there. At the bottom of that body, $691.5. So SPY, SPX, securities like round numbers, right? So like 695 even, or the even numbers, whether it be 691.50, that's like a nice round number. 692.25, a round number, especially in the futures. All right, guys. So now we got all kinds of levels out here to play off of, right? Okay, now any questions so far now? Just shout them out. No questions? All right. Just give me an audio test. Somebody shout out something. Let me know I'm just not talking to myself in the wind. Am I still
No.
on?
You're
No
good.
questions.
Yeah, okay.
We're good.
All right. So now, guys, we have these levels on SPY. We have some good levels going into next week that we could trade off of, right? So hopefully hopefully, we won't be seeing the text in the chat, where, still holding this, still holding that. You guys can play off of your own levels here. Same levels that I have on my chart, right? Same levels that most people have that no technical analysis is on their chart. We're all watching the same shit, we're all looking at the same levels here on what to do.
Yeah, I definitely I try to follow. Granted, I'm watching the market as well, but I try to follow along even if I don't take your trade to see like, okay, I wonder where he at the time where you put it out. I wonder where you looked at it. Okay, I see the pattern forming. I could see why. Like I always try to analyze all your trades as well, even regardless if I take it or not. To try to see. If I
The
don't see it the first,
why,
yeah,
the
exactly,
why did they take the trade? Yeah.
exactly.
Yeah, well, sometimes, it may not be based off technical analysis alone. Okay, it may just be some institutions that come into the market, something's brewing that the public's not aware of. Okay, so institutions on Wall Street, what they do is they buy information. They pay millions of dollars to get the privileged information, right? So let's say an institution knows some executives at, let's say, Boeing, for example, right? And these executives tell these guys, hey, we're getting an order for 100 planes from American Airlines. And we're getting an order from whatever Spirit Airlines or whatever for 20, 30 planes, right? So we know Boeing's going to be making some money, right? So what this institution is going to do is they're going to come over here to the options market and they're going to buy a big sweeping call on Boeing. But the public doesn't know about this yet, right? So we may pull up a chart of Boeing and it may not make any sense, right? At the time, it'll be like, hey, wait a minute, why are they buying calls when the chart looks like, every indication is pointing to the downside, like this is going to go down some more, right? So we may follow that institution's buy on Boeing. You may look at the chart and go, hey, wait, this doesn't make any sense, B, man, this shit's it's going down, but just wait, okay? Just wait. What'll happen is the news will break to the public wires, right? Bloomberg, CNBC, everyone will get a hold of it that Boeing's buying these 100 jet or making 100 jets for United, and everyone's going to pile in. And guess what? We're already there. We already front loaded this fucking thing ahead of the game, you know? So sometimes, okay, it's not going to make sense the why, right? But in most instances it will. You'll see it's like, oh, okay, it came down to the support level. They're buying the calls off of the support, or it's at resistance. That's why they're taking puts, But other times it'll just be a puzzle, dude. You won't know why,
Yeah.
But it'll make sense later. So into the. Go ahead, sorry.
Oh, I was gonna just add on to a little bit, and then especially too, I've noticed because I've been trying to, even though once again it's just random, but just knowing the times of the hours, the half hours, the 15 minutes, and I've noticed sometimes with these big reversals or these big times of like movements are going up and down. Sometimes it's not exactly at the half an hours or the 15 minutes or whatever. It's it's sometimes it's either 2 minutes before 2 minutes after, but I've noticed that like during the day, if it happens to 2 minutes before and it's going into another big shifting, it's going to be the same 2 minutes before. I've noticed that this week and last week that the times where they had the big reversals were always like 2 minutes before, and then later on they're going to do another reversal or another big shove. It's always going to be that 2 minutes before or whatever that 15 minutes or that hour was. I've always seen patterns, and it's been like that for the past 2 weeks. That whether it's going to be 2 minutes after, it's once again probably going to be 2 minutes after. Once again, this could just be a coincidence of these past couple of weeks, but I'm trying to narrow down these institutions of like going live and, really seeing like what is their time frames or what are these little ticks? Because obviously, if it was always at those, one, or what is it, like 11, 12, 1, if it was always like that, everybody would be making money because they know like that's the time to do it. And this is the time
Yeah,
now.
exactly. And that also could be the algos running trades as well. The algorithms do a lot of trading. I would say probably more so than institutions and individual investors.
Yeah.
And they may just be playing for small little ticks. 5 cents here, a quarter there, or whatever, right? But they make whatever thousands of trades a day. You know, and nothing is 100% in the market. Like you said, it's not always going to be the same. You may have recognized the same pattern for the past 2 weeks, but that doesn't mean it's going to go on forever. You know, Nothing's for certain. We have probabilities in the market, but nothing really is 100%.
Yeah.
I've seen institutions come in with flow on a security, millions of dollars, where guess what, it just didn't work out. It didn't. But most of the time, if an institution is going to put millions of dollars on one trade, guess what, most likely it's going to work out, right? Like every time, for the most part, most of the time, 95% of the time or whatever. But there are instances where some shit may happen, some news may break or something where it's like, oh shit, everybody loses, right? back to the
Mhm.
drawing Back to the drawing board, or adjust the position, flip to the other side. We saw some very choppy action last week, right? Big swings, and that's not good for options. Premium doesn't like hike and fade movement. The ups, the downs, the ups and downs. It just annihilates the premium. And especially in a same day trade, you got to be right, man. You
Mhm.
got to be right. You have a short window for that to play out, and you got to be right. It's not like you have a lot of time. It's not like those contracts are out 2 weeks or whatever, and you got plenty of time for it to work out. It's like, no, there's a short window, and we're right most of the time, but we get it wrong occasionally, man. No one's perfect, but the majority of the time we stick it. So let's see here. I want to do another chart, guys. Now that we got SPY, I think that's good for SPYana there. We can move on to another chart and give some more examples of identifying some levels here, right? So let's do
Hey guys,
Qs.
I'm actually gonna have to go, but I know you guys said it's gonna be recording. I'll watch the rest later, but I'll definitely can't wait for another little Zoom session like this. It's definitely always helpful, even if I know the information or not. It's always good to review, and I always thank you for that review. So
Yeah, no problem, no problem. It's good to talk about it. It's been a while since we did one, so I'm glad you could have joined it there for the brief time we're on. So, all right, guys, pull up a Q chart, QQQ, and we're going to do the same thing that we did on SPY. We're just going to map out some levels so we have them for the week, right? So,
If I may, I had
yeah.
one-on-one session with you last year where you talked about MACD
Hmm.
and RSIs as well. Can you
Yeah.
also, with this chart, when you are explaining those support level and resistance levels, can you also bring in those two parameters?
Okay. Sure,
Thank
no
you.
problem. So the first thing we're going to do here on QQQs, right? We have this hourly chart. We're going to map out the recent high, just like we did on SPY, right? We mapped out the high, we mapped out the low. So that's the top of that wick right there, around 627.91. Yeah. Boom. We have the recent high. The next one below that is the bodies of these candles here. These two candles. Boom, boom. Okay, still in the 627. We have a cluster of candles here. 1, 2, 3, 4, 5, 6, whatever, right? So we're going to put another line there. $626. We have another one here. We have another little cluster of candles down here. We got this big green candle here. And the top of this one, this wick kind of overshot it there a little bit. So we're going to put one there. And let's put one bottom here of these wicks. Right about there. We have some levels here on QQQ. So these candles, let me see these guys. So these are those wild swings that we were seeing on Friday. This candle dipped all the way down to 619 up to 625, right? A huge $6 move in 1 hour, just on this candle alone. This one here, another wild one, 619.80 up to the high 624.01. Crazy moves, right? Big wild swings, which is good for options if you're on the right side of the trade of it. You know, you can make a lot of money like quickly. All right, so we're the closing price 626.65 on Friday. A little after hours movement pushed the price up a few cents here, 627 basically. So let's see what our MACD is doing down here. We're up, right? It came around. It's still showing positive for now. The top line of the MACD here is starting to flatline a little bit, right? So we'll be watching for this to kind of curl down. And yes, if you get the cross down, right, what are you going to do? You're going to take some puts, right? The MACD is a great indicator. It's pretty damn reliable. Like I said, nothing's 100%, but this is about the closest thing you're going to get to it. So MACD cross down, we're going to take some puts, and then we're going to be identifying our levels here, right? Where to scale out the trade. So, for example, right now, let's say market session is open, price is moving. We let's say we take some puts just for an example. So we take puts here at 627, right? Our first level of support 626.60. So that's our first trim. We're gonna trim the position there. We're gonna see what happens at that level, right? If it continues the decline, we got 626.09. Boom, we're gonna take some more off there, and so on and so forth, right? You guys get the picture here. Okay, any questions on Qs? RSI, this isn't quite as a reliable indicator as the MACD is. I changed this. Okay, so your your system standard for your RSI is a 30 on the low side, right, which will show in oversold condition, and 70 level on the upside, which indicates an overbought. So I changed mine to 80 and 20. 80 to the upside, 20 to the downside. I give it an extra 10 there just for cushion, because oftentimes what happens is a security can enter the overbought condition over a 70 RSI and maintain that for quite a while. So 80, I give it a little cushion there to the upside and downside. Okay. So that right now, on an hourly chart, we're right up there. We're just about to 70, which indicates the overbought, right? Let's see here. Okay, guys, any questions on that so far? So your MACD trading the MACD, right? It's simple, okay? I like to keep my charts very simple, man. You'll see some online or whatever that throw out a chart and they got fucking lines everywhere. It's like, how can you even read that? You got one indicator that's not jiving with another one and lines all over the damn place, and it's a mess. It's confusing, right? So I like to just keep it simple. The simpler the better. All I'm using here is some moving averages and my MACD. Okay, now we can get into Fibonacci extensions and stuff later, but I keep it very basic, very simple, easy to read, right? I don't get confused when I pull up my chart. One indicator isn't conflicting with 9 other ones that I have on the chart. How many indicators do you need? Not very many, So here, MACD is a great indicator. I use it all the time. This may be one of the why are they taking the trade scenarios? Well, the MACD crossed up. That's why. Or it crossed down. That's why. And you could see the price action here from the MACD, what happens. So here, right in there, the MACD crosses up. You could see the green line come up, cross above the purple line, and it's reflected up here in the price action, right? So it crossed over right about there, 623s. Boom, 3 hours later, we're sitting at 627s, which that move right there in the 3 hours is a huge win in the options, in the QQQ, if you took the calls on the MACD cross up, right? All you had to do was let it play out, sit back and wait, right? You're trimming your gains along the way, and then what happens down here? Right in there, it crosses back down. Green line crosses below the purple line. We have a classic MACD cross down, bearish indicator. What are we going to do? We're going to load puts, right? And what happened? This one took a little bit longer to play out, right? So we kind of bounced around sideways and then whoosh, down we went, right? Again, huge win if you took the puts on the MACD indicator. That's telling us the market's going to come down, right? Especially in a same day option at the money strike. You're going to make way more in a same day option strike than you are playing it 2 weeks out, 3 weeks out, a month out, whatever. Any questions on the MACD? I highly recommend that indicator. Get it on your charts, use it, watch it. And you can go back in time over and over again and see the results from these MACDs. So right there was a cross down. Price action was up here, 623.26. Boop, 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 boop. Down it went, right? So that was what a $2 move, a nice gain in the options. Scroll back even more. Here's a cross up. Or we'll start with the cross down right here, right? Big red candle, right? Swooshy. Boom, down we go. Wow, shit, man, that was a nice MACD cross down, right? And it even continued to go a little lower. We come over here, what happens? It crosses back up. What do? We get long. We buy some calls and we ride it to the upside, man. Back and forth, back and forth. It's monotonous, all right? So any questions on the MACD? It's pretty simple. You just play the cross ups and cross downs. So any questions on that? Pretty easy.
Good. Thank you.
Yeah, what you might get sometimes now, like I said, no indicator is 100% accurate in the market. Things could always go wrong. And with the MACD, what you might see sometimes is a fake out, right? So let's say the MACD crosses up and then you're like, okay, I'm going to get long. I bought some calls and you're all happy. And then it fakes you out. What happens? It comes back and crosses back down like soon, So you got to kind of watch for that. Make sure that MACD is a nice solid cross, because sometimes it'll fake you out. It'll cross up. You get long, you buy some calls, and then whoop, fake out. It cross back down. Doesn't happen very often, but occasionally it does. But most of the time, I would say about 90% of the time, you could trade off of this MACD indicator alone, just trading the cross ups and the cross downs, right? So right in here is a good example of that fake out shit, right? So we have this just kind of going sideways, It did actually make a cross there. So some sideways action, but here's the cross. Here's the real one, You can even give this a little bit of time to confirm that it's crossed up and that it's going the way we want it to go. MACD indicator, great indicator, guys. Use it. Put it on your chart. Use it. Pay attention to it, and it works on anything. I don't care what you're trading: futures, tech, healthcare, fucking whatever, man. It's a good one. So yeah, just to recap here, guys, I just want to go over a few things. So let's go back to our SPY chart. Sweet SPY-ana. We have our levels there. And again, moving averages will act as support and resistance. So always keep that in mind. So here at 693.9, we have the 5-day simple moving average. This blue line that's moving through the chart also happens to coincide with that 693.9 level right there. And these moving averages, like I said, are going to be moving around. They're moving averages. They move as the market moves. Right now, the market's closed, so everything's still. So I think that's it for today's session, guys. Unless feel free to ask any questions. If you got any questions regarding anything, you want to take a look at some other charts. Maybe you're holding some stocks. Let's take a look at them now before we close up shop. No question?
Do you have any recommendations on Intel?
Intel, INTC. Let's check it out. We played puts on this for a nice gain. They more than doubled. Okay, so let's map it out real quick. We have the high. That's the first thing we're going to do. Where's that high at? There it is, 72. 45.72. Even though that's one little candle wick up there, that's fine. It's only one candle, not three, but it's a high. Same thing with the lows. That's fine. Just one candle low Go ahead and stick that level. Okay, here, that level right there. So we have the top of this candle, 1, 2, almost 3, right? We have some support. There's another couple candle touches. So that's another support there. Okay, we have the top of these 2 candles here. There's software out there too, guys, that will draw these lines for you. I still do it manually, the old school way. 4478. We have a couple of candles here, right? So price came up with this big green candle from this low, bounced up here, came back down to there, came up, came right back down to there, came up, came down, right? So we have that level. There's some action there. There's some price action going on. Buyers and sellers are there. So it looks like we have plenty of candles here. Bottom of that big green candle. So there you go. You got plenty of levels, plenty of range to play on Intel. Okay, RSI overbought condition. Over 70, remember, is overbought, right? We get up here to 80, definitely overbought. And you could see there, it kind of came back down, bounced off my 80. Perfect. So overbought conditions on Intel on the hourly chart now. This hourly MACD strung out, man. This thing, it ran crazy, right? And it's starting to kind of flatline here. So we'll be watching that. If it cross downs, what are we going to do? We're going to enter some puts, and then we're going to start playing off our levels up here as to where to start scaling our position. That's Intel. I don't know, any news on it recently? I don't know, what is this article here? Intel stock momentum doesn't quite make sense. Intel launched its Panther Lake processor. Okay, as Intel stock still its time. Finish the week. Oh, who really wants a new PC right now? Okay, yeah, some people do, some people don't. Yeah, just looking at Intel, I'd probably be bearish from here. But we'll keep an eye on it. You know, maybe it just looks a little overextended. So if we do take some puts, guys, maybe it runs back up there to that new high. We may take some puts on it, and then we have our levels here mapped out on it on where to go with that trade. Any other stocks you're looking at? Anything you're holding? Anybody got any stocks they want to analyze? Now's the time to do it. Let's take a look. So going forward into next week on SPY, we have that rogue candle, this long stick right here, all the way down to 689.6. That's the level I'm looking forward to for next week. Okay. We have the MACD flat. Okay. Hasn't crossed down yet. We'll be watching that. This is an hourly bear flag happening. So here's your flagpole, this red candle, right? And then we have this flag stretching out, right? Same scenario as last Tuesday when we saw that road candle, a bear flag formed after it, and sure enough, down we went. So just looking at this chart, I'd be leaning bearish going into next week. So we'll see what happens. We'll see how pictures appear later this evening, and we'll take it from there. So that's it, guys, for this little session, man. I hope that, any questions on the support and resistance and how to draw it. So remember, you're looking for these candle touches, right? And the more candle touches you have, the better, right? So here's a bunch of them down in here. So we have a candle touch there. 1, 2, almost 3, 3, 4, 5. Okay, so there's another support line down below the 50-day moving average. That also happens to be right about where that rogue candle came down to. Imagine that, right? So that's it, folks. We're looking to maybe short this market here in the next week, but we'll see how we open, and we'll go from there. So in closing, any other questions, guys? Like I said, this is a big hammer stick, right? So that's a bullish here, but it also needs follow through, right? For it to confirm what it's doing. So it did kind of follow through a little bit here, but this rogue tail coming down to 689 again. I'm going to be watching that. Going to be watching all these levels that we drew on this chart here and be trading off them. So let's get after it, man. Next week, let's make some more money, guys. Any questions before we close? No? All right, Jules, let's wrap it up, I guess.
All right. Well, I appreciate it. Thanks for everybody.
Call it a day. Yeah,
Thank you.
thanks for joining, guys. I hope this information is helpful for y'all. And if you guys have any questions, you can always just throw them out in the chat or message us.